Hey guys, this is Mr. Miles. Welcome back again to my class. If you haven't subscribed, you can subscribe and hit the notification bell so you don't miss any video, guys. Because I'm trying so my level best to make sure that everyone understands and can get a better strategy that it can make you some good pips. Okay. um Yesterday last time my previous video I was talking about the bullish order flow, and I drew the order blocks on the bullish order flow, and I promised that I will make a second video on the bearish order flow. And this is what I'm doing today. Okay. And secondly, I'll put a link after this video of my Telegram group that you will join, so we shall be sharing setup. So guys, don't miss, just stay tuned. So back to business. Last time I told you very well that we have two types. Okay, we have what we call a bullish order flow, which we covered last time. Okay, then we have what we call the bearish order flow, which we are covering today. Okay, cool. I want, like, by when we finish this course, everyone should have understood trading very well. Okay, a bearish order flow means a downtrend. Okay, price is moving down. Okay, when price is moving down, we're gonna have a series of lower lows, lower lows, lower lows, lower lows, lower lows. That is a bearish order flow, guys. Cool. Now if this is a bearish order flow, we're gonna look at the rules. Okay, the rules. I told you, for you to draw the order block in the bearish order flow, you're gonna look for one thing, guys. One thing. The first thing that you look for is look for your lower lows, and after looking for them, mark them. Okay, I'm gonna mark my lower lows using this. Let's say these are first lower low, second lower low, okay, third lower low. It is kind of steep there. There was a big pressure there, market makers were so strong there. Okay, another lower low and lower low here. Okay, and you can also say another lower low here. Sorry, I think I got the wrong point. Here is another lower low. Sorry, let me hit this, another lower low here. Okay, back to business. What was I trying to say? The first thing is that you're gonna mark your lower lows if you're gonna be looking for your order blocks in a bearish order flow. That is a downtrend. This is my first lower low. Okay, after spotting the first lower low, you're gonna ask yourself one question, guys. In this lower low, what is the last bullish candle to be formed before this lower low? It is this small candle here. So you're gonna draw the order block. Okay, you come to this rectangular point, drag the cursor up to here, draw the order block in such a way that you're gonna include the top wick and exclude the bottom wick. That is the opposite of the bullish order flow. So let me draw it. Include the top wick and exclude the bottom wick. Check that rejection, guys. That was a good rejection, good entry points. Okay, let's move on to the next point. This another lower low. Okay, look for the last bullish candle. It is just this one next to this one. Draw the order block in such a way that you're gonna include the top wick and exclude the bottom wick of that bullish candle. Okay, let me draw it more better. I push it to that wick. Hope you guys can understand what I'm trying to do here. Okay, let's move on again to the next lower low. This is our next lower low. Okay, what is the last bullish candle? It is this point here. Okay, here, draw it, include the top wick and exclude the bottom wick. Hope I'm clear there. Okay, somehow congested, but make sure you guys understand what I'm trying to do. Yeah, let me pull this one here so you can see this point here. Include the top wick of that bullish candle. Okay, again go to the next lower low. this our next lower low. What is the last bullish candle? Last bullish candle is this one. Include the top wick and exclude the bottom wick. For this point, this candle doesn't have a bottom, it only has a top wick, so we have to draw it. You can draw it even up to here. You can pull it to any lengths you want, no problem. Cool, that is it. Okay, hope everyone has understood there. Go back again to the next lower low. It is this one. What is our last bullish candle? It is this one here. Come here, drag it, there it is, guys, there it is. Sorry. Okay, let me push it a bit to that blue bullish candle. Yeah, I hit it there, right? So I'm gonna explain what happened in the market in this point. This is a bearish order flow. For your case, this is as the AUD US dollar H1 time frame. Okay, actually the best time to draw your other blocks is H1. Okay, so we are going to start from the fresh. I'm gonna delete this first one and this second one. Yes, let's start with the first one. I said this our first lower low. Okay, look for the last bullish candle, which is this one. Draw your order block, then wait for rejection points to hit, pullbacks to hit your order block. You're going to enter your first trade from here. You're already in some good pips, okay, to the next lower low. Okay, there is a pullback again to this order block, but price is respecting this order block because there is no candle that's closing above this order block. Same point to this rejection here. You guys can understand me? So after price rejecting this order block, it went for a second lower low, a strong one, which is here. So let me delete this also so you can understand. I want to move step by step, sorry, step by step. So this is our lower low. Okay, draw the order block. Come here, guys, draw the order block, include the top wick of that bullish candle, make it, yes, we have included the topic of that bullish candle. So what happened, guys? What happened? It was very clear. There was a pullback, okay, a pullback, then a rejection, but price did not close above this order block. So the order block is still valid, and our downtrend is still moving down for as long as the order block is still being respected. What are we looking for? We are looking forward to reach the next lower low, which is this point here. When you look at this next lower low here, let me pull here so you can understand what happened there. Let's say our order block ends there. This next lower low here, draw the order block. I told you this is our lower low. This is our lower low here. Look for the last bullish candle. It is this one here. Draw the order block in such a way that you're gonna include the top wick and exclude the bottom wick of that bullish candle. Let me draw it well. Yes, so you can see what happened in here. Price is respecting this order block. Even there was a good structure here, this an M structure. You can see here there is an M structure here, right here, this an M structure, okay, and price had to bounce from this order block. This is a pullback, then we're expecting again to move to the next lower low. Okay, guys, so here is a point when price does not respect the order block. We're gonna go for that point. Let's say like this. Let's say this is our last lower low here. Okay, this pattern like engulfing, this is our last lower low. Draw the order block, include the top wick of this bullish candle and exclude the bottom wick. We're drawing it. Cool. what happened? Price closed above this order block. Okay, so it has disrespected our trend. Our bearish trend has been disrespected. Okay, so this is not an order block. Now we call it a breaker because the price has not respected the order block to bounce from here and continue to make another lower low. Price closed above the order block. So what do you expect? You expect a retest to the order block, okay, to the retest to the breaker. It's no longer an order block. Then price again has to move up to start a new bullish order flow. Okay, so when you look at this new bullish order flow, you're gonna look for higher highs again. If you missed that video, you should check it about the bullish order flow so you can understand very well. Okay, let me break it like this, guys. I'm trying to say like this. Okay, this is our order block. Okay, and our order block was disrespected because price had to close above the order block. So when price closes above the order block, it's no longer an order block, it's a breaker. Okay, so when you have a breaker formed, the trend has been disrespected and you're expecting a bullish trend to start. That is a bullish order flow. Okay, so after this point, you're gonna start looking for higher high. Okay, higher high, higher highs. Look for only higher highs because the trend, the bearish order flow has been disrespected. You can hear me? I hope you guys have understood about the rule that I'm trying to tell you. In bearish order flow, you're gonna do one thing. Look for your lower lows. If you want to follow the trend, look for your lower lows. Okay, after looking for your lower lows, draw your order blocks in such a way that you wanna include only the top wick and exclude the bottom wick of the last bullish candle to be formed in that lower low. Okay, then after that you're gonna expect price to bounce from that order block, then make another lower low. Okay, bounce from the same order block, then make another lower low. But if price closes above the order block, it is no longer an order block. The trend has been broken, so we're expecting a bullish trend. So that is what we call a breaker. This is what has been formed. This is a breaker, not an order block. Why is it a breaker? It is a breaker because price has closed above the order block. It has disrespected the order block. We expected a retest to the order block, then makes another lower low, but price closed above the order block. So when price closes above the order block, it has disrespected our trend, and when our trend has been disrespected, we are looking forward to a new trend. So we shall start looking for higher highs. That is a bullish order flow. Okay, hope you guys have understood this. You've understood. Those are the rules that you should never forget. Drawing order blocks for a bearish order flow is different from drawing order blocks of a bullish order flow. If you didn't check my video of bullish order flow, you can just go and check it so you can learn how to draw order blocks of the bullish order flow. If you don't understand, you can just hit me and tell me, please, I've not understood what you are saying. Then I can make more examples so you can understand what I'm trying to say. Okay, now so that is the technique of which the dealer uses. Okay, he's gonna respect your order, your order block. Okay, because that is where price is so stiff. Okay, and you don't expect price to close above. If it closes above, then your trend has been disrespected. Okay, so you're gonna look for possible ways of buying from this point because it's no longer an order block, it's now a breaker. Okay, so if you don't understand this video, you can just text me, you can WhatsApp me that I haven't understood, that I can make an extra video for you, or I can organize a Zoom meeting for you so you can understand the video. Hope you guys have a nice time. Then there is a video I posted at first which is very important. The video is about how to understand candlesticks in high time frames like weekly and monthly, so you can predict the future price. That is a very important video. Remember, candlesticks is a background to forex, so you have to understand that even before understanding this. Okay, so guys, I think I'm gonna wish you a nice time. Catch up next time for a new video. Next time we shall be speaking about a breaker and what we call a source. Okay, those are our key entry points in this strategy. So guys, let me wish you a nice time for now. Have a blessed day.